So today we're going to go over Group 3 and Group 1 of the YieldMax ETFs and see what they're going to pay out. And then we're going to take a look at the charts. I want to show you one of the options that I did make today and a couple other stocks that I am watching. Hello my friends, this is Legend. Today we're going to see what the announcements are for the YieldMax Group 3 and Group 1. So before we get into that, if you don't mind, hit that like button. It would be much appreciated. Let's just go ahead and jump right on in. And let's start off with Group 3, as the X date was today and the payment will be tomorrow. Now this is one of their newer ones, and this is a Target 25 ETF, and they've got about 3 in there right now. The MSTY, NVDY, and TEST. So let's see if they're staying in line with what they've been paying out. So MSTY uses Mr., and all these are weekly, has a distribution of 22 cents. NVDY uses NVIDIA for 23 cents, and TEST uses Tesla for 26 cents. And if we look for MSTY, looks like 22 cents is pretty standard so far for the last 3 distributions that we have received. And it's still pretty new, so we'll see how it actually can hold up. For NVDY, we got 23, 23, and 23, so it's holding strong at that 23 cents. And so far, looks like it's somewhat trading sideways. That's a good thing. And TEST has been 26, 26, and 25. So somewhat holding pretty strong right there at that 25, 26 cents. And the interesting thing about this one is, looks like you have a nice little move up. So way to go, TEST. Now let's just go ahead and jump right into Group 1. And for Group 1, this is for December 16th, an X date of December 17th, and the payment date of December 18th. So we'll start right off with Chippy for 37 cents, FEAT for 26 cents, FIVE 22 cents, GPTY 25 cents, LFGY 28 cents, QDTY 29 cents, RDTY 37 cents, SDTY 20 cents, SLTY for 44 cents, ULTY with 49 cents, YMAG with 13 cents, and YMAX with 12 cents. So out of these, I have YMAX, I have ULTY. So I'll be able to update my spreadsheets with these distributions to help lower my real price per share. And I have a sheet here for RoundHill, and this is for WPay. It has an X date of today, December 16th, and a pay date of December 17th, and it's for WPay for 48 cents. And one more for RoundHill. I have the X date for 12/17, pay date 12/18, and this is for the Bitcoin and Ether call strategy. The Bitcoin being YBTC for 21 cents and YETH for 19 cents. And the last announcement sheet that I have is for a Defiance funds, and this has an X date of 12/17 and a payable date of 12/18. And for Defiance, we have AMDY for 20 cents, ETHI for 5 cents, HIMY 9 cents, HOOI 14 cents, MSTY 9 cents, PLTY 16 cents, SMCC 11 cents, and QLDY for 18 cents. So that wraps up the distribution announcement sheets that I have for YieldMax, RoundHill, and Defiance. Now let's just slide over to the Webull charts and let's take a look at a few different stocks, as I wanted to show you an option play that I did today, along with a couple other YieldMax ETFs that I was hoping to be able to buy today, but it just did not give me the right price. And I want to show you what indicator that I'm watching in order to tell me when is the right time to buy. So we'll take a look at the YieldMax ETFs here, and HOOY is one that I did purchase, and I did purchase that yesterday. And as you can see, we had that red candle. It was on the bottom half of that Bollinger Band, and that RSI 2 was under 10. it was sitting at 3.64. I'm glad I went ahead and did purchase some yesterday because as you can see today, it actually popped up a little bit. Now it's still on the bottom half of that Bollinger Band, but that RSI2 is now at 51. So had I not purchased yesterday, I would have missed that buying opportunity. But that doesn't mean that's the only chance, right? Because it could come on down a little bit tomorrow or the next day and present another buying opportunity for me to jump in and buy more shares. And the other one I did buy yesterday was SMCY. And again, you can see if I zoom in here, yesterday we had that red candle and we were toward the bottom of that Bollinger Band right there, right? Didn't quite get down to it, but we were close. So I did go ahead and buy because it was on the bottom half of that Bollinger Band and that RSI2 was under 10. It was at 1.5. And just like on HOOY, had I not jumped in, I might have missed that buying opportunity by the end of today. Now, looks like first part of the day, it would have gave me another chance to buy if I didn't already buy, but it didn't stay down there very long. And that RSI2, when it was down low, it would have been down below 10 at that point. But since it did move up, the RSI2 moved up with it. And by the end of the day, it took it out of that buying opportunity point that I'm looking for. Even though it is on the bottom half of that Bollinger Band, that RSI2 is above 10. So that's a hold for me at the moment. And how about the other two that I was watching? As I did mention, I was looking to hopefully buy some more of ULTY. And here we are looking at ULTY. And you can see yesterday we did have that red candle. It did go through that midpoint. And it was probably close to about halfway on the bottom half of that Bollinger Band. And that RSI2 was under 10. But since it was going through that midpoint, I was going to hold off and wait to see if we can get a candle to open and close under that Bollinger Band. And hopefully to be a red candle, maybe even lower than it was yesterday, to be even a better buy point. But I did not get that today. Looks like we had a little bit of a pop up on ULTY, which then of course did move that RSI2 up to 30. So it's a hold for me, even though it is on the bottom half of that Bollinger Band. And the other one, of course, that I was watching was CONY. And you can see on CONY, we had that same type of setup, right? Going right through that midpoint. So for that case, again, I was going to wait, even though I did mention the fact that it was so close to that bottom of that Bollinger Band that I probably could have bought that, because at this point, it was probably a little over halfway past that midpoint of that bottom half. So it was probably halfway through that bottom half of that Bollinger Band. So I probably should have purchased some yesterday, but I was being a little greedy and was hoping to get a better price, but that's okay. We did have a little pop up, but it was still a red candle because it did close slightly below where it opened, but it did open higher than it did close yesterday. And since it actually closed higher than it closed yesterday, that's what gave us our green number up here, showing that CONY went up 44 cents today. Now, CONY is still on the bottom half of that Bollinger Band, but that RSI2 is at 24. But if we get another little small pullback, and this one here, since that Bollinger Band is getting pretty tight, it wouldn't really take much to drop this down. And the bottom of that Bollinger Band being at 42.16, it would be great to get it around about 42.50, as that would be pretty close to the bottom of that Bollinger Band. And of course, why would I be purchasing CONY or ULTY or even HOOY and SMCY? Why would I be looking to purchase more? Well, that's pretty simple, because I track my real price per share, which is this number right here. And that's this number that is in green and red, right? If it's green, that means if I buy more shares, it's going to raise my price per share, and I don't want to do that. So if it's green, I'm not looking to buy more shares. But if it's red, then that is the first indicator saying, hey, keep an eye out for these. if it does drop down to a price you like, if you do buy, it will help to lower that real price per share. So had I bought some of CONY yesterday, that could have helped lower that real price per share a little bit. And then if it dropped again, I could have bought even more, and that would help it drop even more. But that's okay. I'm sure I'll get other opportunities. So as you can see, CONY, ULTY, SMCY, and HOOY are the ones that are red. Now notice HOOY, I did purchase more, and HOOY actually went up, right? It's at $50.39. And because I lowered my real price per share down to $51.49, I am now only 2% down. And that's because the price of the stock actually went up, which helps me to get closer to that break-even status. And of course, buying shares under my real price per share helps to lower my real price per share. So therefore, I am lowering my price and the price of HOOY is going up. So it's just meeting in the middle, and eventually I'm hoping to pass and then turn HOOY green. And it's already getting really close. And that's how I'm playing these ETFs. So I'm working to keep that real price per share down, because if I don't purchase more shares while it's under my real price per share, then it's going to take even longer for that price to eventually get down to the price of the ETF itself. Because the distributions does lower my real price per share, but if I can buy shares under that real price per share, then that's going to lower it as well. So I am helping to speed that process up, get it as close to that market price as I can, so that when that market price turns around and it goes up, then I'm in the green. And then the distributions from that point on continues to lower that real price per share, even though the market price of that ETF may trade sideways or go up, or even if it went down a little. As long as I'm continually lowering that real price per share, I can continue to lower it and keep moving away from that market price, therefore giving myself more and more of a buffer to allow that ETF to move as it does. So that's the reason it's very important to track that real price per share, and that's what my sheet here does. You can simply go right to one of the ETFs right from the summary page, click the stock tracker link right here, takes you straight to that sheet where you'll enter in all your purchases and your distributions, and it does all the calculations for you. And then it populates that summary page so that you don't have to go through each single sheet to look to see what your real price per share is, as it's all being captured on that summary page. But on each individual sheet, you can always go right back to that summary page by hovering over the back to summary, and you click that link and boom, right back to the summary page. Nice and easy, quick and simple. But as you can see, all of these ETFs that I have with YieldMax, Defiance, and RoundHill, along with JP Morgan, right, with JEPQ, all of them are profitable except for 4 of them. So out of 14, I have 4 of them that is not profitable. The one that is down the most is CONY at 14%. So that's the one that I'm going to have to really focus on and work to bring that real price per share down and help to lower this percent and get my real price per share closer to that market price. But that's okay. It just takes a little work. But overall, if you look at the complete total of it, and I've got it all totaled up on the far end, if I were to sell everything, I will clear $17,167. That is selling all the shares out of all of these ETFs. I will clear $17,000. So I don't fully understand people when they say that everyone loses on these high yield ETFs. I think people lose if they're not playing them right, because you have to play them right. You have to be careful with them, and that's the way I'm handling it. I do not purchase more shares unless that market price is under my real price per share, not my purchase price per share, because that's this number here, right? On CONY, my purchase price per share is $82.93. Well, with the market price of $44.13, that's a big loss right there, right? You're looking at that and you're like, well, I might as well just give up and sell out. But that's why you track your real price per share. Because if you're tracking this, where I'm showing mine at $55.85 and the price being $44.13, yes, I am down, but I'm only 14% down. And that's the one that's the worst right now, right? But I am planning to get this one pulled down as well. I'm just waiting for the right moment. So the last thing I wanted to take a look at is a option play that I did make today. I did a little bit of a day trade with SPY. I actually sold a put. Now, since SPY is at a $678 price, I use my IRA account for this one. So for SPY, I actually sold a $677 put. And let me show you how I set that up. And we'll go to the 5-minute chart and we're going to zoom back and we're going to zoom out a little bit as I want to show you how I set it up to begin with. All right, here we go. So here we are right now. We're in the after hours and this black area is the trading day. Okay, so the way I set this up is before the open of that trading day, which would be this area right here. And I'll box that in just so that you can see. Boom. This is yesterday's trading, and this would have been the after hours before the open of today. So this is the area that I am looking at before the market opens. And the way I set up my lines here is that I will draw a bottom line at the bottom candle from that start of yesterday to before the market open of today. So I would draw that line and that's going to put it right there, right? And that's the bottom, right? So what's the top? Well, the same thing. I look for the highest point of that candle and it started out really high yesterday and it just kept coming down, right? So that would be the high right there. So right there is my limits. And this is the box that I'm basically working within. And that helps me know when I'm getting to a high point or the low point in this short-term viewing window. And I'm going to remove the box because it probably makes it a little difficult to see. But you get the idea. I'm still looking at this area. So I have that upper line and I've got the lower line. Because if I zoom in, right there it is. There's the bottom, right? That's the bottom. And that upper line, it just happens to be pretty much right at opening. So I drew that line right there at the upper side. So when it opened today, it was on the lower end, but it started moving up. But it did not get back up to this high point of yesterday. It actually started dropping, right? And it actually ended up dropping below our lower line. Now that line, I had it at 677.67. Okay, and that's not dialed in to the penny, right? That is just a reference line, but it's close to that low point over here. So as you can see, it was bouncing somewhat off of that line, right? It was poking through, but then it would come back up and poke back through, and eventually it fell below it. And when I opened up SPY to look at it, it was around this time right here. So I thought I had already missed it, right? Because it had poked below it. And by the time I looked at it, it was already coming back up above that 677. So what did I do? You can see right here. See that little bell? And if I hover over that bell, I put a alert on here. If I click it, it tells me to alert me if it drops below 677. So that line is right through here, okay? And that's what I'm saying. I thought I had missed it right here. But what did it do? It actually started dropping again. It alerted me, and it was kind of going back up and over this 677 area. So when I saw that it was actually coming back down and it triggered my alert, I went ahead and I pulled my option chain up and I saw it sitting right there at that 677. And since that is under the low for yesterday, I went ahead and I sold it right there close to that 677. So that's what I did. I sold that put at 677. And that ended up paying me, and you can see right here's my order form. Right there, it was filled. I earned $1.15 for that, times 100 shares. So that's $115 just for one day. And as you can see, it looks like it was filled at 1241. So if we pull up the chart right here and we go to 1241, there we go. It was actually this candle as it was kind of coming down. Looks like I did get triggered and then it started moving back up. So I put that order in, got $115 for it. And of course, when it did start dropping, then it was worth around probably $175. But if you want to try to jump in, sometimes you just gotta pull that trigger, right? If I would have set it at $150 or $1.50, whichever one you want to call it, and then that thing would have turned around and went back up, then I'd been kicking myself trying to be too greedy. So I earned that $115. It dropped all the way down to a price of $674.98, right? Wow. Started trading bit sideways, consolidating, and then all of a sudden popped back up, shot past the line and dropped back down. So I thought, oh boy, I might be getting put these shares, and that would be all right because I would be hoping that tomorrow it's going to pop up and I would own those shares at 677. And if this thing popped back up to 680 where it's been, that would be an easy $300 in price appreciation along with whatever premium I would earn on that deal. And I shouldn't have to purchase those shares. Therefore, I can look to sell another put if it decides to move down again tomorrow. So selling options is a lot of fun, but you have to be very careful with it because you've got to make sure that the stock that you're selecting is a good overall stock. And that's why I always look at the 1-year chart and the 5-year chart with my moving averages turned on. I always look for that chart and those candles to stay above that 200 MA for the most part. This dropped because of an event. We know what that event was, the first of this year. But those candles are staying above that MA200. That MA200, which is this red line, is also going up and to the right. And then if we look at that 5-year chart, look at that. 200 MA going up and to the right. That's a positive sign. And the candle staying above that MA200, that's a positive sign. So what that tells me is if I get it wrong and I have to buy those shares and that price of that stock goes down, this history is what I'm going to look back on, right? I'm going to look back at this history and it's going to give me a little bit better feel to know this is not going to go crashing down to the ground. Over time, history says this stock wants to move up. So yes, I could get to a point where I may have to hold those shares, and that's always a risk you take at any stock that you purchase. But if you're looking at the long term of it, and that's that 1-year and 5-year chart, and it's moving up and to the right, and it's staying above that MA200, to me, that's just about as good of insurance as you can get that eventually your stock will recover and you can turn that into a profit. And of course, none of this is guaranteed. This is only my opinion and my thoughts, how I'm looking at the ETFs and stocks on these stock charts. So before I wrap it up, if you would like to get a copy of my spreadsheet, there will be a link to join the Discord in the pinned comments and in the description below where you can join Discord. You'll be able to get a copy of my stock tracker sheet where you'll be able to enter in each high yield ETF that you have, enter in your purchases, your distributions, and you can have up to 20, all right? It'll track up to 20 different ETFs and it will track each one separately. But the good part is you don't have to look at each sheet. It also combines it all into the summary page where you have one sheet to look at and it's going to give you pretty much all of the important information that you're looking for. So come on over, join the Discord. You'll not only get this link to the high yield stock tracker sheet, but you'll also get notifications of any stocks, high yield ETFs, day trades, swing trades, option plays that I am doing throughout the day. Now, I'm not going to make something happen in the market. I want the market to move and come to me before I jump into a play. But I do notify my Discord members when I'm buying and also ETFs or stocks that I'm looking at. And then once I'm in it, I'm also telling you when I'm looking to get out. So I'm showing you my prices that I'm looking at for getting in and getting out. Now, none of this is financial advice. This is only me showing what I'm doing, but I'm just sharing my journey, and you're more than welcome to watch and enjoy. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button and smash the like button. It would be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.